And let us consider how to predict short-term stock price movement with sentiment analysis. How would you use sentiment analysis to predict short-term movement in stock prices? Sentiment analysis involves assessing the mood of market participants, through data sources like news, like social media, and financial reports to predict short-term, stock price movements. Here is how it works. Here is how you could utilize sentiments to predict the behavior of stocks, in the short term. Number one is analyzing news and media coverage. You may need to analyze news and media coverage. So in this context, you consider, positive versus negative news. Positive versus negative news. Sentiments analysis. You may need to to utilize tools. Sentiment analysis tools, and these tools can scan news articles. It can equally look into press releases and financial reports to assess whether the tone is optimistic or pessimistic. And so positive news often leads to increase in prices, while negative news could trigger a decline in the price of assets. So you also need to consider market reaction to news. How does the market react to news? So in this context, discover that by analyzing past market reaction to similar news stories, sentiment analysis can produce it can kind of predict how stocks are likely to respond in the short term to upcoming similar news, either any reports or product launch or other relevant news. How did the market react in time past? It will equally react the same way, all things being equal. So that could act as a guide. If you are a short-term trader, these are the kind of indicators you will then use to, and will help you, guide you in carrying out your trades. Number two is social media sentiment. Social media sentiments. So in this case, you look at real-time, sentiment tracking. There's this real-time sentiment tracking. So in this case, platforms like Twitter, like Reddit, example, Wall Street Bets, and other social media network provides a wealth of real-time information, even to the stage of people getting over-informed, information overload. So sentiments analysis tools can analyze large volume of posts to determine the prevalence sentiments towards a stock, whether positive, negative, or neutral. So these tools actually could go a long way in determining the state of investor sentiment. It could be positive, it could be negative, and it could be neutral. That will help investors to know what they need to do at a particular point in time. So you also look at viral trends. Viral trends. So social media can rapidly influence stock prices. A surge in positive sentiments or hype around a stock, especially among retail investors, can lead to short-term price spikes. Conversely, negative sentiments can lead to rapid sell-off. When sentiment turns negative, the next thing is that there will be massive sell-off in the market and prices will plummet. Number two is investor sentiment survey and reports. Investor sentiment surveys and reports. So in this case, you have this AAII, sentiment survey. Survey like the AAII sentiment survey can be used to measure investor mood, which often predicts short-term market movement. For example, when a large proportion of investors are bullish, stocks may be at a risk of pullback due to overconfidence. Generally, when the entire market is bullish, people become more confident. It will have an appropriate influence on stock prices. So you also look at contrarian indicators. Contrarian indicators. So extreme levels of optimism or pessimism can indicate that a stock or market is due for a reversal. When you look at extreme optimism as well as some extreme pessimism, it's indicative of the fact that the market is due to correct, to self-correct. So sentiment analysis can help detect these extremes and predict potential price movements. So you could use these extreme, events to or behavior to predict market movements. Number 4 is option market sentiments. Although we don't really have unfortunately, we don't have options. We don't trade options in the Nigerian stock market. Probably in future we may do so, but for now, essentially equities, bonds, ETFs, and other related investment. But we don't do options. So in this case, you consider, put call ratios and volatility, put call ratios and volatility by analyzing, options market sentiments such as the put, call ratio, or implied volatility. Sentiment analysis can gauge how investors expect, stock price movements. And not only that, a high level of option activity, particularly with puts, could signal bearish sentiments and a potential downside, in the short term. Please like this video and subscribe to this channel so that I'll be motivated to bring contents of this nature that is designed to make you a better investor, a more learned investor. Because the more you learn, the more you earn, and the more knowledgeable you are, the more you are going to, the more your chances of making it in the markets. Please like this video and don't forget to subscribe to this channel and make a comment in the comment section if you feel it is necessary. And number 5 is sentiment and technical indicators. Sentiments and technical indicators. In this case, we look at sentiment as a complement to technical analysis. You could carry out technical analysis, right? Analysis of stock, volume and prices and charts and other related, related symbols. So in this case, you don't just stop there. You could equally incorporate sentiments into your technical analysis and mix. Sentiments, analysis can be combined with technical indicators. Example, moving averages and relative strength index to identify trends and confirm, price patterns. For example, if sentiment analysis detects a shift from negative to positive sentiments, technical indicators shows a bullish, breakout. This could signal a potential upward, movement of price. You see, and so you discover that when you incorporate both technical analysis and sentiments, it give you, it will give you the ability to make better decisions when it comes to, your investing decisions. Number 6 is impacts of rumors and speculations. Impact of rumors and speculation. Unfortunately, rumors and speculation have impact in the market because market participants are human beings, right? And they're not computers, all right? And so they tend to get influenced by rumors as well as speculation. So in this case, you have rumor-driven movements, rumor-driven movement. That's a stock price movement that is essentially driven by rumors, not fundamental, not something really serious, just rumor. So social media and news can also spread rumors, which may lead to sharp short-term price fluctuations. So sentiment analysis can quickly pick up on such rumors and provide an early warning of potential price volatility. So if you analyze sentiments accurately, you could determine precisely how a given rumor could impact, your investment one way or the other. Number 7 is market sentiment indicators. Market sentiment indicators. In this case, relevant indicators here are the VIX, volatility index, as well as some other relevant indicators. So sentiment analysis, also uses market sentiment indicators like the volatility index to predict short-term price movements. So a rising, VIX, signals increased fear and uncertainty, typically leading to higher volatility and price swings. So while a declining VIX suggests more stable and more stability and less movement. So all these indicators would go a long way in helping you as an investor. Apart from the fundamental analysis of stocks, relying very much on relying so much on company fundamentals, you should not ignore the impact of sentiments, on the stock prices, because market participants are human beings, and we are not always rational in our behavior and decision making. So we are like influenced by emotions and even by sentiments. So take that into consideration. So in summary, sentiment analysis can predict short-term stock price movements by tracking the emotional tone of news, social media, investor sentiment surveys, as well as some market indicators. And so by identifying shifts in sentiments, investors can anticipate price changes and adjust their strategy accordingly. So monitor sentiments, right? Get the outcome, get your information, from sentiment analysis, and apply that information on, and to how you make your investment decisions. It will really, at the end of the day, help you to, to obtain better results.